Hi, hello, welcome you all to yet another video from my channel. In this video, I'm going to tell you about cash budget adjustment. I have already uploaded one video related to cash budget introduction. So I suggest you to first watch that video, after that watch this adjustment. But if you are already good with the basements or the basic concept of cash budget and you have doubt with adjustment, this video is exclusively meant about how to deal with the various adjustment in cash budget. Okay, let us get into the video. Adjustments. The cash budget only records the cash realized or paid related to a particular item in the month. So, cash budget, I know where we don't make entry of actual transaction. Okay, actual transaction. For example, if we have sold for 10,000 rupees, we don't enter all the 10,000 rupees as in the cash budget. Whereas in the cash budget, we enter only that amount of the sale which has been realized. That means for that amount of sales where we have received money, that is only we are making entry in the cash budget. It does not consider business transaction in general. As I told you, we don't consider the general business transaction, whereas it consider only cash transaction in particular. Okay, so that there comes we have to do some adjustment. That is, we cannot directly enter the sales value in the cash budget, whereas we have to adjust and calculated the amount realized from the sales in the particular month. So that is what we call it as adjustment or the additional correction you have to make to do the entry in the cash budget. I'll go one by one. The first is credit sales or purchase. Okay. So what do you mean by a credit sale or purchase? So any sale or purchase where the money is not paid or received immediately, then it is said to be credit purchase or sales. We are buying from someone, but we are not paying the cash immediately, then that purchase is recorded as credit purchase. Or someone else is buying from us and they are not paying the cash immediately, then that particular sales is recorded as credit sales. So if this is a case where we have both cash purchase and credit purchase, we have cash sales and credit sales. So you cannot have the exact sales amount entered in the cash budget. You cannot have the exact purchase amount entered in the cash budget. You have to calculate that, okay, in this month, what are the amount I am receiving respective to my sales? In this amount, what and all amount I have to pay respective to my purchase. That's what this credit sales or purchase is about, right? So if the amount of sales is received after the time of sales, it is credit sales. Similarly, the payment of purchase, if done in a later date, it is credit purchase. The collection and payment of the amount is based on the credit period. So this is what the important term you have to look in for calculating the sales and purchase value for cash budget, that is the credit period. So the amount you are going to enter in the cash sales column and the purchase column is purely based on the credit period either we allow to our customer or our supplier allow to us. So that is what we are going to see. Example, given sales value for 6 months from January to June. So to explain this condition, I'm going to take an example. So in the example, we have sales value for 6 months from January to June and you are required to prepare cash budget from April to June. So we have to prepare cash budget from April to June, and whereas we have information available from January to June. Okay, sales value January 25,000, February 28,000, March 27,000, April 30,000, May 35,000 and June 42,000. So here we have different cases, right? So that is what I told you that about credit period. If no adjustment is given, that is no credit period is mentioned, that is one case. or if the credit period is 1 month, and if the credit period is given as 2 months, and if the credit period is given as either 15 days or half month, or if 20% of sales is cash sales and the 50% of credit sale amount is received in the next 2 consecutive months. So these are the ways in which you get the information about credit period, right? So we'll see one by one if what else will, if what is given, what we have to do. Okay, in each case what we have to do, that is what you are going to see one by one. First, if no adjustment is given, when there is no adjustment is given, what we have to do, all sales are assumed to be cash sales. The same for purchase also. When there is no adjustment, no information about credit or cash is given, we assume that all sales are assumed to be cash sales. The same value given in the table is entered for particular month. Okay, so we are going to enter the same value, no correction, no alteration. What is mentioned as sales for April, you are going to enter the same as the April sales. Let us see in our example. So here, as I told, you're going to prepare cash budget for April, May and June. So now we have sales value and we don't have any adjustment. We don't have any information about credit period. So in that case, so what will be the scenario, right? So for April, what will be the amount? So we are not going to make any alteration. We are assuming all the sales as cash sales. So this 30,000, okay, this 30,000 will be the sales value for April. Similarly, the 35,000 of May will be the sales value for May, and 42,000 of June will be the sales value of June. Isn't it right? This is what we have also seen in the previous video where we were discussing about a simple problem without adjustment. That is, when no adjustment is given, we don't do any alteration in the value. We directly enter the exact value for the exact month. If the credit period is 1 month, okay, so there is an information about the credit period and the information given is 1 month. The customer will pay the sales amount next month. If it is mentioned as 1 month, means the customer who are buying the product this month will pay the amount next month. Hence, we will receive the previous month's sales money only this month. So, this month what I will receive, if it is the case that when any customer buys the product, he pays the amount next month. So, if this is the case, what will be my receipt this month? I will receive the money of sales which happened last month. Okay, so I will receive the sales money which happened in the last month. Here also you are not going to do much calculation. Again we take our example, right? So we'll see the solution. Here if you see, you're going to prepare April, May, June. So as per the thing, 1 month means, suppose if I sell something in January for 25,000, then I will receive the amount in February. So as per what about the particular month entry, that means this April month I will receive something which I sold in March, right? So the March amount is 27,000 which I will receive in April. Okay, and the April amount is 30,000 which I receive in May. Next, May is 35,000 which I receive in June. So again, this is also very simple, and most of the case they will give 1 month credit period only. There you don't have any problem. Just what you have to do, you have to enter the previous month value when it is given as 1 month. Okay, next, if the credit period is 2 months, okay, just like 1 month, here the credit period is 2 months. That is, the customer will pay the sales amount after 2 months. What the customer will do, he will pay the sales amount after 2 months. That is, if someone buys the product in January, the next month will be February and the following month will be March. So only by March I will receive the money for my January sales. Okay, vice versa. in March I will receive the sales I have done in before 2 months, that is on January. Okay, so hence we will receive the 2 months previous sales money only this month, right? Okay, we'll take our example. So for example, we are preparing for, okay, April, May and June. So if April is 30,000, which we will receive only in June. So what we will receive in April, we will receive before 2 months. Before 1 month is March, before 2 months is February, right? So what is the February amount? That is 28,000. This 28,000 I will receive after 2 months, that is on April. Then March, my sales is 27,000, which I will receive on May. Then April, my sales is 30,000, which I receive on June, right? So far so simple. Okay, if no adjustment is given, the same month. If one month credit period is given, you're going to take it from the previous month. Take the value of the previous month. And in case if they have given 2 month credit here, you're going to take the value of the value before 2 months. So, okay. Next, if the credit period is 15 days or half month, from this way, when it is given in such a case only we are going to do calculation. All the case just carry forward, and we have to make sure that what value we are carrying forward to the answer, right? But here we have to do calculations, 15 days or half month. The customer will pay the sales amount in the present month and in the remaining in the next month. When half month means half of the amount I will receive this month itself, the remaining I will receive in the following month. That is, for example, if someone is paying on buying something on 1st of January, okay, then only 15 days is a credit period, half months is the credit period. What it is assumed, so they will pay it on January 16. Okay, after 15 days they have to pay, and whatever they buy on Jan 2, they have to pay it on January 17. So similarly it will go one by one, and until January 15, okay, I will realize the amount now itself, that is by January 30. Okay, we know January 31 days is there, but when you do such management accounting calculation, you have to assume that all month has 30 days, right? Then only you can get a even calculation. If you took leap year, February 30, 31, all that, it will get into confusion. So whenever you do management accounting calculation, it is assumed that every month has 30 days. Okay, so now as per our assumption, if somebody till 15, they will realize in the same month itself. Okay, 15th I will be receiving on January 30. Then what happen if I sell something on January 16, that I will receive only by February 1, that goes to the next month, 15 days credit period. So half of it I will receive this month and half of it I will receive the following month. Hence, we will receive the half of the previous month amount and half of the same month amount. So this month, January 1, what I will receive something I sold on December 16. So from December 16 to December 30, whatever I sold, I will receive from January 1 to January 15. Okay. Then whatever I have sold from January 1 to January 15, that I will receive on January 16 to January 30. So half of the previous month amount and half of this month amount what I will receive if the credit period is given as 15 days or half month. Right? We'll take our own example. Okay. We have to prepare for 3 months. Okay, so here I'm introducing a table. Okay, this table, this is the way I teach my students. So this is very easy. When you do this calculation in the table format, it is not mandatory you have to follow this table format, but I am suggesting this as an easy way for you, and I used to suggest this for my student also, so they feel comfortable and they feel not confused when they apply it, right? So now we'll do our calculations. Okay, so let us start with March. 27,000, right? So this March 20,000, what I will receive, half, that is 13,500 I will receive in March. Remaining 13,500 I will receive in April. Clear? Right. Next, April is 30,000. Half of 30,000 is 15,000. Okay, 15,000 I will receive in April and 15,000 I will receive in May. Next, May 35,000. Half of 35,000, it is 17,500. So 17,500 I will receive in May and remaining 17,000 I will receive in June. Next, June 42,000. Half of this is 21,000. So whereas 21,000 I will receive in June itself and the balance 21,000 I will receive in July. So now we have classified the thing. So now I want to know that what amount I will receive in April. So if you make a total of this column, you will know what you will receive in April. If you make a total of this column, you will know. So our area is this April, May and June. For this only we are preparing. So what will be the amount? So the total of April 13,500 plus 15,000 is 28,500. 15,000 plus 17,500 is 32,500 and 17,500 plus 21,000 is 38,500. So this is how you calculate the receipt when it is a half month. So as per our calculation, the amount we are going to entry for April sales is 28,500, May 32,500 and June 38,500. This is one calculation. Then the most critical one, very rare you get adjustment like this. So if 20% of the sales is cash sales and the 50% of credit sale amount is received in the next 2 consecutive months, right? So here what is the concept behind? We'll see. The entire sales amount is divided into 3 parts. So for your understanding, I have put an underline below the 3 parts. Okay, what is the first part? The first, it is divided as 20% cash sales and 80% credit sales. So first what we have to do, first in the given value you have to divide the cash sales and the credit sales. The cash sales we will receive in the respective month itself. Okay, so first you have to separate the 20% cash sales from the given sales value. What you have to do is, next, the 80% credit sales is further divided into 2 equal parts because 50% of the credit sale amount is received in next 2 consecutive months. So next month I am receiving, out of the total credit sale value, I am receiving 50% in the next month and the balance 50% in the following months. So totally 3 parts. What is that? Hence, what we will receive in this month, we will receive, okay, previous 2 months, okay, half of the previous 2 months credit sales and cash sales of the particular month. We'll see with the example. Okay, our own example. And now we'll calculate the solution. So now I have expanded the table because we have to, for particular month, we have to take into consideration the sales value of 3 months. So that's why I have expanded the table from February to August. Okay, our main area. So we need 2 months. 3 months is related to every calculation. So when we do April, we get effect from February and March. And when we do for June, that is also scattered to July and August. So that's why I have expanded the table. Okay, let's go one by one. Okay, cash sales on February. First, we have to find out what is the cash sales on February. So that is rupees 28,000 into 20 by 100, which is rupees 5,600. So 5,600 we will enter for February, right? Next, credit sales on February. So remaining, if 20% is cash sales, remaining 80% is credit sales. So 28,000 into 80 by 100, 22,400. This 22,400 is divided into two, that is 11,200 and 11,200. So one 11,200 I will receive in March, another 11,200 I will receive in April. So similarly, we'll do it for March. So when you do it for March, cash amount is 5,400 and the credit amount is 21,600, which is divided as 10,800 in the following two consecutive. So next we will work out for April. So April, the total sales is 30,000 and the 6,000 is the cash sales, and remaining 80% is credit sales, that is 24,000, which is divided as 12,000 and 12,000. Then you'll follow it for the month of May. May, out of 35,000, 7,000 is case sales and the remaining 28,000 is credit sale, which is divided as 14,000 and 14,000 for the next consecutive. Then we'll work out for the June. For June, the total sales is 42,000, whereas 8,400 is the 20% cash sales, and credit sales comes around 33,600. The half of 33,600 is 16,800. So which is equally divided for the month of July and August. Now our area of question is the total cash receipt is calculated only for 3 months, April, May and June. So we'll put the total of April, May and June alone. So 11,200 plus 10,800 plus 6,000 is 28,200. 10,800 plus 12,000 plus 7,000 is 29,800. And June is 12,000, 14,000 plus 8,400, that is 34,400. Okay, so now we have seen all that. Okay, similar. Now what I did for cash, the same applicable if it is given for purchase. There is no variation between cash sales. I mean the calculation for sales and budget, it is all one and the same. The place we make the final entry only varies, but the calculation part all is like same. So when no adjustment is given, what you have to do, you have to enter the same value. When 1 month credit period is given, you have to enter the previous month value. When 2 month credit period is given, you have to enter the value before 2 months. When it is given as 15 days or half month, you have to take half of this month and half of the previous month. The total will be entered. And when it is given is like that, this percentage is cash sales and this percentage is credit sale. First you have to identify the cash portion that has to be entered for the same month, and the credit portion as per the suggestion. So here it is 50% in 2 consecutive months. The remaining amount is divided into 2 of the first half in the following month and the remaining half in the next following month. So okay, so this is how you have to deal with adjustment when it is for credit sales. The next case is the other receipts and payment. So far you have seen for credit sales and purchase. I have already told you that apart from the receipt of sales, you may have other sources of receipts. And apart from the payment for purchase, you may also have to pay for other areas. So that is what we are going to see. In addition to sales and purchase, the company may have other regular receipts and payments. The treatment of other receipts and payments also similar to sales and purchase. The way you treat, okay, whatever may be the adjustment given, the way you are going to calculate is going to be exactly same how you calculate for sales and purchase. There is only one difference. So when you do calculation for other receipts and payments, there is only one difference. Here, if no adjustment is given, we have to consider the previous month amount. Okay. So generally, when we are calculating for sales and purchase, what we will do when no adjustment is given, we will, I know, for example, if March means we'll take the March value directly. If April means we'll take the April value directly. But here, okay, for other receipts and payments, when no adjustment is given, what we have to do is for March, we have to take February value. For April, we have to take March value. So why we are doing like that? Because always it is assumed that we receive for other things after the date of completion, or we make payment for other things after the day of completion. So for example, we don't receive the salary of this month in the beginning of this month, right? Either we will receive it in the end of the month after calculating our right, all the days of working, are in the beginning of the next month. And we pay electricity bill not in advance. What we do, after the consumption of our electricity only we pay the electricity bill. So with that assumption, we assume that all the other receipts and payments are paid in the following month. Okay, and rest all treatment is same. Okay, rest all treatment is same. So for your satisfaction, what you can do when no adjustment is given, so generally they'll give that all the other payments are paid in the following month. If it is not being given, you can put an adjustment note that it is assumed that the payments are made in the following month. So that's it you have to do. Thank you, students. And I know you do practice some problems and see that I know how it is easy for you. And I'm planning in another one video. Already I have uploaded a basic cash budget video, and this video is about adjustment. See all the two videos consecutively, and within a short while I'll upload in another video regarding the one complete problem with adjustment. I'll explain you. So hope it will be useful for you. Thank you. Thank you.